If I could travel back in time to meet my younger self and I could give him a piece of advice, I would tell him to start investing right now, get owning equities, buying equities right now. And I only started investing very late in my late 30s or early 40s. And I've been having equities for less than a decade, which is not good. I want to quote Naval Ravikant, who is a modern philosopher and also a very famous angel investor who is really, really rich. He once said that to get wealthy, to achieve your financial success in the modern age like right now is you need to acquire and own equities. So that means you could create your own business, you could be an entrepreneur, or you could be buying the shares of other companies and you share the growth and the revenue of these companies. And I think that is so true. You cannot rely on your salary for your entire life. That is not sustainable because you're essentially trading your time with money. But when you own equity, your money makes money, grows, compounds for you, and that is so important. And the reason I haven't started early is that we used to hear all these terrible stories, people who went broke in the stock market. I grew up in Taiwan, and I grew up in a time that the economy was booming, was growing so rapidly, but from time to time there would be some significant crashes due to many reasons, and people lost a lot of money. People who are opportunists, people who are not investing long term, people who are buying and trading as if they're gambling, and also they treat it like a game. And I heard too many stories of that. So there is a very fundamental conception that is deep-rooted in my mind that stock is a dangerous place. Until recent years, I started to read more and hear more about what's long-term investment is really about. And I changed my attitude, I changed my mindset. And then for the past couple of years, actually, I started to see my wealth grows rapidly. I mean, not so rapidly, I'm saying in a compounding way. Because if you're investing in the long term, your money will compound. And I was so lucky I live in Taiwan. Our economy for the past decades have been booming. And also half of my portfolio is invested into the US stocks. So the US is one of the strongest economy nowadays in the world. So they're both growing. I was blessed and very grateful for that. And I will continue to do so. There is a statistic saying that 90% of people, they will lose against the growth of the entire market. So my strategy is very simple. I just invest in these ETFs, engrossing the entire market, like Taiwan 50, and that is they're indexing the 50 greatest and largest company here in Taiwan, and they have this mechanism, so they will filter out the companies that are underperforming and replacing with good companies. So fundamentally, you're buying the entire market, and I use the same strategy here in Taiwan and for US stocks as well. So if I could tell my younger self, just please start investing and see and witness the power of compounding. And also, I think investment is sort of like a skill that you need to get practice. Even you're just buying ETF, but you need to get into the habits of putting away some of your money and investing it into your portfolio and just make it a habit, and seeing your money grow and seeing your portfolio grow. And I think that's something that you want to start as early as possible. So if I am in my early 20s, even I didn't make much, but you just have to do that, and you will see that your mindset, your understanding will change from time to time. Because if you start earlier, and sometimes you will go into this kind of crisis where the stock market crashes and you would freak out. Sometimes you would lose a lot of money in the short term. But if you have practiced that and you have that experience, and then you've been through a couple of cycles, and you know that in the long run the stock market is going to coming back. Of course, on the premise that you are investing in a healthy and growing economy body, right? So the earlier you start, and then you have this experience, you witness so many cycles, and you understand that is all fine. At the end, everything's gonna work out as long as you have the persistence, you have the consistency, and you have the patience to see your money grow. So I always tell my friends or my people when we're talking about investing or getting equities, I would say, I'm not going to take this money in. I'm not going to withdraw this money like in a decade or 15 years, even 20 years, because I'm looking long run, right? And I'm just putting away this money and let money to work on their own. I have no plan of returning them. I have no plan, and I just enjoy seeing the numbers go up and seeing my portfolio growing bigger and bigger. And also when the market is underperforming, it is going down, I also practice my mental ability to stay calm, to stay poised, and to have the patience and perseverance to going through financial, in terms of the portfolio, to going through this kind of cycles. So I think that's pretty important. And at the end, if we're looking at fundamentals, I think I touched on this earlier before, is that three kind of freedoms we are searching and seeking in our life would be, the first important one would be the financial freedom. So that's why today we're talking about this. And then with the foundation of financial freedom, then you can seek psychological freedom, which is meaning that you have the privilege to think about the things that you want to think about. You don't have to worry about the people's business. You don't have to worry about things that's outside your control. That is the second one. And the third one is tied with the financial freedom, which is a physical freedom, which means you are free to move, you're free to go anywhere, you are free to leave the environments or situations you don't like. And that has to be supported by financial freedom, because if you have money, you can just be anywhere. You can just go walk away from the environment you don't like. You can walk away from the work you hate. You can work from the toxic workspace. So out of the three freedoms I talk about, the most important thing is actually the financial freedom. And so take that seriously. As if you are young, in your 20s, or even your late teens, or if you started making money, I would encourage you just start getting equities and getting practice. And ultimately, I think money is just a vehicle. Money is a tool for human beings to exchange values, right? We used to exchange with shells or other items, but now money is actually just a vehicle for value. So you have to change the way you look at money. Money is not evil. Money is not unethical. Money is actually very important, because money is something that can help you get away from things you don't like to, and also not to mention that to buy things you like, to buy happiness for yourself and your family, to buy freedom, to buy experience as well. So look at money this way and start investing as early as possible. And that is my advice to my younger self, and hopefully this is helpful to you. So please make sure you subscribe and comment and like this video. I would be really happy to hear your thoughts. My name is Basement. Thank you.